What is going on, guys, and welcome back to the Young and Intelligent Money Investing channel. Today we are talking about day trading restrictions, how to get around them, what they are, pretty much everything about them. But before we get into that, I just want to welcome all the new subscribers. Thank you guys for all the support, and ask you guys if you could please drop a like and a comment on this video. Let's try and hit 15 likes. That'd be awesome. Let's celebrate me hitting $4,600 in the portfolio for the very first time. All right, let's get into this. So we're going to start out with what is the day trading, pattern day trading / day trading. Now, what that is basically when you're buying and selling the same shares in a single trading session. So essentially, let's say I wanted to buy a share of SPHD. For some reason I wanted to day trade that. I buy it at the beginning of the day and then sell it at any other time during that same trading session. That is considered a pattern day trade or a day trade. Make sense? All right. So next, what are the restrictions? So essentially these restrictions limit trades on accounts with $25,000 or less in funding, and that kind of limits the vast majority of investors, especially in Robinhood, because most Robinhood accounts are for a little bit more beginners, so most people aren't going to have $25,000 to throw around on their very beginning trading account. So I have to cover this up just for a little account information up at the top, but now I'm going to show you guys the inside where you guys can track your day trading. So as we can see down here, I'm at 0 day trades, and let's go to day trade settings. We can kind of see, you see at the top it's 0 of 3. A day trade is the purchase and sale of the same stock in the same day, and you can enable this protection, which will not allow you to go over that limit, and if you do, it will kind of cut you off for, I believe it's a week or two of doing any sort of trading whatsoever. And now, a lot of people think these restrictions are by Robinhood, who have only used the Robinhood app before, but they're actually SEC restrictions, which is a little bit strange for most people to think about, but it actually makes sense, like why they would do those trades, like restrictions, from like a lobbyist perspective and from a big money perspective, and we're going to go over that in just a second. So now let's talk about why. So keeps the money with big money experts. So let's say you have less than 20, let's say you're a smaller investor and you have $10,000 to invest and you want that in a day traded fund. Well, you can't do that yourself now. So that makes sense for the big money guys who want to take a % or 2 a year off of your total capital in their investment fund. So they have that money in there with them instead of with you. And they're going to say that they're better and more responsible with the money because they're experienced, and that kind of allows them to keep the money by saying they're protecting you from yourself, essentially. And that kind of goes along with my next reason, which is the inexperience of small investors. And the inexperience isn't going to let people, and because of these rules, they're not going to let people make 10 trades a week, and they might lose money on 7 of them and make money on 3, because a lot of it's just going to be kind of random if you don't understand the charts and stuff like that. I don't personally like these rules just because I think that you should be able to do whatever you want with your money, and I'm not really that much for regulation and stuff like that. But I'm sure it has protected people from losing some money, but it's also stopped people from learning about how to trade and the patterns and stuff like that by kind of going out and doing trial by fire, which I think is a great way for a lot of people to learn. So I have one more thing here, and yeah, that's just the protection. And they're like pretty much just going along with that same theme. The lobbyists will basically tell the SEC and make these limits because they're protecting small investors from losing their money on day trades when only the experts should be doing it. You guys can't see me, but I'm doing a little air quotes because I think it's kind of a BS rule, but it's how it is right now, and I would imagine it's how it's going to be for the foreseeable future. So ways to get around this. You can either only do a couple day trades a week. I believe that the number is 3 max, and then on the 4th you'll get cut off for a certain period of time. And then the other option is to abandon day trading in general, which I think can be a lot random unless you really understand the charts and believe in the charts. And instead of day trading, you do what's called swing trading. So swing trading is when you're going to take an individual stock, let's say Apple. A lot of people don't think you should trade Apple, you should just hold it. But for this example, you're gonna like Apple is a stock that has a lot of big moves. So it will have really big drops, and it'll have big gains again, big drops, big gains. So with those kind of things, what you're trying to do with swing trading is sell at these tops and buy it back in at the bottoms. So let's say let's talk about in this last year. There's been a bunch of huge moves in Apple. I've held it through pretty much everything. So let's say I could have sold off at 63 here or anywhere on the way up, and then after it takes a big dip, you buy back in, and then you sell off at a higher price. That's essentially what the goal is. I think a lot of the time with this strategy, you're going to end up leaving money on the table because obviously if you can buy at the top and sell at the bottom, you're going to be the best investor ever. But that's just not a realistic case for the vast majority of the time. For me, I would rather just sit on my shares and let that money just grow and grow over time rather than trying to time the market and with really strategies that will end up making you less money in the long run than just sitting in the shares. You, especially for Apple, like that's why everybody tells you that buy Apple, don't trade it. I would be surprised if you guys haven't heard that before, like that phrase. They talk about it on CNBC all the time. A lot of other YouTubers talk about that same phrase as well. So while I do not typically recommend doing any day trading or swing trading, I'm more of a long-term holding investor. These are ways to understand the day trading restrictions and how to get around them a little bit when you have under $25,000 in your account. So I hope you guys enjoyed this video. Please, again, drop a like down below. Tell me what your trading strategy is in that comment section. I respond to all the comments, so I would love to be able to interact with some of you guys. That'd be awesome. And I'll see you guys in the next one. See ya.